Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, September 23rd, 2013. Last week, the S&P 500 broke out above the prior multi-year high at 1705 and auctioned up to a new multi-year high at 1727. Following the initial breakout, the S&P futures auctioned modestly higher in the next day's session. On Friday, S&P futures failed to auction back up and retest the multi-year high. Price traded up to 1620. Selling pressure entered at the open, and the S&P sold off, broke down below the prior minor low at 1713 and traded back down at or near where the rally had started at previous resistance, down at 1705. The selling pressure that was dominant during Friday's session continued at Monday's open. The S&P traded below Friday's low and auctioned down below Thursday's low, the day of the rally, and auctioned down below Wednesday's low, which was the day of the rally following the FOMC announcement. S&P futures sold down at or near the prior two-day low. Before auctioning up to the previous multi-year high, S&P futures gapped above a prior three-day high. The three-day high at or near 1685, along with the minor low at 1675, represents the downside support cluster. The 1670 price level was also the minor support level when the S&P traded up to the previous multi-year high. This middle bracket represents what was a supply cluster. The S&P traded down to previous support at or near 1620 in late August, and in early September built a base of support from which the S&P has traded back above the previous multi-year high and has auctioned up to a new multi-year high at 1727. On Friday, when the S&P auctioned below the minor support level at 1713, after selling off below the minor support level and breaching support at 1713, the S&P sold down to 1701 before retracing back up modestly to 1708. During today's session, the S&P initially held support at Friday's low. Price auctioned up off the low and traded back at or near the late in the day retracement level on Friday, at or near 1707, 1708. At today's open, the S&P sold down below Friday's low, pulled back below the FOMC low, the low from Thursday, down at 1694, and traded down modestly above the prior support level at 1688. As we come into Tuesday's session, key support now rests at today's low and at the prior 1688 low. Beneath today's low is the upper three-day demand cluster at or near 1684. The bottom of the cluster is another key support level at or near 1670. In relation to today's close, minor resistance is up at 1708. Key resistance is located up at what had been previous support at 1712. Major resistance is located at the multi-year high 1727, and the midpoint of the upper trade cluster is located at 1720. That concludes today's recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log in and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.